strategy has, right? So now you're talking roughly, $50 billion of Bitcoin. That's not a very big reserve for a country. And so you
Yeah.
start adding up those demands on supply, and it's a big number. And then you look at pension funds that want to put 1% or 2% into Bitcoin. And you see the growth of the ETFs. The Bitcoin ETFs in 12 months have grown to have more assets under management than gold ETFs took 20 years to accumulate.
So let's talk about this Bitcoin strategic reserve, and I do want to touch on some other aspects of Trump's policies that may or may not affect Bitcoin, including, of course, the appointment of another SEC chair, Paul Atkins. But on the Bitcoin strategic reserve, first of all, there's now talk of Russia launching their own Bitcoin strategic reserve. Take a look at this particular article here from Forbes. A lot of articles covering this story, but this one's from Forbes. Leak reveals Russia's bid for Bitcoin strategic reserve amid 2025, huge 2025 price predictions. After the U.S. Treasury named Bitcoin digital.
Bitcoin is a strategic weapon. We have a strategic oil reserve today that was created as a response to the 1970s oil crisis and the oil embargo as a way to protect this country from people keeping us out of getting oil. And today it's just used as a mechanism for leveling pricing in the oil markets domestically. But internationally, if we have a Bitcoin strategic reserve, we can impact Bitcoin price. We can impact people's ability to use Bitcoin. This is also why Bitcoin mining is so important. Think of Bitcoin mining as block space. You need to have block space to be able to process transactions. The more mining that exists outside the US, the more outside nations have the opportunity to block the US from putting transactions into those blocks. Right? It's kind of like airplane capacity. There are only so many seats in every block, and there's a block every 10 minutes. And if the US only has 10% of global hash rate, US transactions could only be guaranteed to be processed in 10% of the cases, right? So it's very important for the US to have a significant amount of block space, somewhere upwards of 40%, such that no nation can lock over time. The risk you have, though, is that, the whales become the ETFs. The government, sure, could be a whale, but the government never acts very quickly about anything. It's, the ETFs are very driven by the underlying shareholders, right, who are the individuals who are buying shares in the ETFs. And so public sentiment and emotional sentiment for Bitcoin will be just as important as public sentiment is for equities today.
How do you see the miners positioned in this Bitcoin strategic reserve transition or implementation? Could you see a scenario in which the government could perhaps invest directly in Mara, or perhaps have a partnership with some miners like yourself and buy directly from you?
So the only reason for the government to try and buy Bitcoin from a miner is because they would want to buy Bitcoin that hadn't been to every 3 years, refresh our fleets, et cetera. So we're moving towards a different business model, which is much more long-term. And we'll see what those companies do, up to the next halving when things will get very different.
Well, let's talk about your company and your future plans. Do you foresee any changes to your strategy or core strategy and timeline now that we do have this idea of a Bitcoin strategic reserve?
Well, we're going to continue to grow our Bitcoin mining operations. Historically, we grew our capacity 3x in 2023. In 2024, we grew it a little over 2x, and we'll likely continue at a similar rate in 2025. Our technology business is now starting to get traction with commercial customers. So we're starting to sell our liquid cooling infrastructure to folks in the mining space, and we're very actively involved with people in the hyperscaler and the AI space. We have a lot of exciting products in that roadmap for the AI HPC industry. We see a lot of synergies between what we do today in load balancing the grid and helping hyperscalers and inference AI so you keep your OpEx low. And then when the price comes back up, you start mining it and you didn't lose any gold. In the world of Bitcoin, it's a zero-sum game. If you're not operating your Bitcoin operations, every 10 minutes, a new block gets awarded. And if you're not in that race, it's not something you can put on the shelf and come back to later, right? So it's a very CapEx intensive business. And there are some people who view the volatility the beta, if you would, that Bitcoin miners provide as a little too risky sometimes
Yeah.
because of that volatility. And you saw people who saw the swings 2022, 2023. And as MicroStrategy built their model, they don't have that CapEx risk that Bitcoin miners have. And so I think, you've got this kind of, you can hold an ETF, you can hold MicroStrategy, you can hold miners. We are moving much more towards being an energy and a technology company.
Mm-hmm.
In the event we would have to sell it, we would, of course, have to sell it. So.
I think I've asked you this before, but we can revisit the topic of energy costs and just long-term fixed costs overall. As Bitcoin halving continues, it's a 4-year cycle. It will happen every 4 years. The energy required to produce or mine Bitcoin will double. What's your long-term strategy for keeping energy costs down in light of halving cycles happening every 4 years?
Well, we've been talking a lot about near zero cost energy. So we bought a wind farm in Texas that effectively gives us zero marginal cost energy. We don't have to pay for the wind to blow, right? We just have to pay to maintain the wind farm. And so instead of putting new machines at that site, we took machines that we had replaced at a former site or an existing site where we upgraded machines to the latest. And we were able to repurpose older machines to this site because if the energy costs us nothing, then we don't have to have the world's most efficient machines at the site. And so we're able to extend the life of our machines. So think about this business being very CapEx intensive. If you can double the lifespan of the machine for wallets is not dissimilar to the algorithms that are used for protecting all bank accounts, passwords to systems, asymmetric keys, basically. And asymmetric keys are very susceptible to quantum attack, whereas symmetric keys, which is more similar to what's used for securing the Bitcoin blockchain itself, are much harder. Plus the fact that you just have so much compute power continually being added to the Bitcoin blockchain that makes it even harder. But you could go from SHA-256 to SHA-512 through a simple software change, which would make wallets even that much harder to hack and add decades more to the kind of potential risk curve. And you're already seeing companies coming out with quantum-proof wallets. So I think this is something that is because it'll never show up on somebody's statement. It might be a 1 cent deviation, right?
Sure.
But it's not something anybody's going to ever calculate. And you could steal billions of dollars that way.
Yeah, I think that's the plot.
And the answer
that was the plot of Office Space, but go on.
Yeah, but I mean, it's a very obvious attack, right?
Yeah.
And you could get into people's accounts and just move money. So it's RSA algorithms are the protection mechanism for the vast majority of financial infrastructure today. That's the target for quantum. So because you can do it quietly.
What's the security protection mechanism against this for the financial institutions?
Yeah, they have to upgrade to quantum-proof encryption, which, again, NIST has recommended standards. It'll take about 5 years for companies to roll out these changes, but it's a significant lift of work. This is kind of a Y2K problem. You can look at it like that.
I see. Okay, but for the crypto space, like I mentioned, perhaps other cryptos with weak
things like that. So. That's where I would worry.
All right. Final question before we go, Fred. We mentioned the Bitcoin Strategic Reserve. I mentioned the very opening that Paul Atkins will replace Gary Gensler as SEC chair. Any other changes from the Trump administration that you're looking forward to as CEO of Mara?
Well, I think the Crypto Council that was announced yesterday or the day before, I think it's going to be very exciting to see what they do there. We're certainly, obviously, very willing and interested to serve there in any capacity we can. And we think it's great that the government is taking a very forward-looking perspective in how digital assets should be used, how stablecoins should be applied, how Bitcoin mining could be used, not just from an energy stabilization perspective, but also